Imagine you want to buy a share in a company, but the price of a single share is so expensive that one share takes up a huge concentration of your portfolio. Whether it be Amazon's share price of around $3,000, Tesla at $860, or the most famous example of Berkshire Hathaway's Class A shares at a staggering price of $530,000 a share at the time this video was filmed. These stocks are likely out of reach for many investors who want to hold a diversified portfolio. For example, if you wanted Amazon to represent 1% of your portfolio at a price of $3,000 a share, your portfolio would need to be worth $300,000 US. This is why brokers have started to offer something called fractional shares, where you can buy a fraction of one share for a fraction of the cost. But the question is, are fractional shares worth it? Hi, my name is Chris Kovalchuk, and I'm an associate portfolio manager at Claret Asset Management. And in today's video, we're going to be talking about fractional shares. I know what you're thinking. This is great news, right? No stock is too expensive. Well, not so fast. Fractional shares can be a great opportunity for the everyday investor, since they make investing in high-priced stocks more accessible. However, there's a cost associated with fractional shares that you should know about. Not all brokers offer fractional shares, and whether they are worth the cost depends on a few factors. First, there's a direct cost to purchasing fractional shares. At Interactive Brokers, the transaction cost for one share, or less for those trading fractional shares, is a minimum charge of 1% of the transaction value. There are no commission-free options available for fractional shares. Let's look at this advertisement by Interactive Brokers, the e-trading platform, taken from their website. According to this chart, you can invest $25 into Netflix, Tesla, Google, and Amazon. Seems great, right? With $100, you can buy these 4 stocks that each have a share price over $500. However, if you look a little closer, you'll see that you're charged 1% or $1 to buy all the securities, and you'll also be charged 1% to sell. That's an expensive brokerage commission. There might also be additional fees, depending on the brokerage. Let's look at Interactive Brokers again. If you buy a stock that pays a dividend, you will only receive 75% of the dividend you're entitled to, while Interactive Brokers keeps the remaining 25%. That's a quarter of your dividend earnings going straight into the broker's pocket. So if you bought 85% of a stock, which pays a $1 dividend, you might think you would receive 85 cents as your dividend, but you would actually only receive 64 cents. As always, when investing, it's important to know about all the associated fees. If something seems too good to be true, it's highly likely that there are hidden fees or costs you may not be fully aware of. Finally, it's important to note that brokers do not offer fractional trading on every security. There is only a finite list of available stocks which you can buy a fraction of. So what should you do? Exercise caution when investing in fractional shares, and always do your homework when it comes to associated fees. You might also want to consider some great alternatives like ETFs and pooled funds. Similar to fractional shares, they offer investors the opportunity to buy a group of company shares at a much lower and affordable price. Thanks for watching. For more investment-related topics, visit our website at claret.ca or get in touch with me directly by clicking on the links in the description. And don't forget to click on the subscribe button below.